Hi guys, welcome to Matthew Clark, that's me. Thank you very much for FX Street for having me back. While I let those of you who don't know me, who are not part of our regular sessions on the Global Forex Pros. My name's Matt. I have been a foreign exchange trader for 24 years now. I know I don't look that old. I originally started in London, where I trained as a market maker. For 2 years, I sat next to what at the time was the #1 dollar mark trader, and where I kept his positions and monitored his P&L in real time. At that time, obviously, technology wasn't quite what it was. And so we had to do a lot of things manually, including keeping the orders, which is still not really changed in real time, other than the fact that now the computers take care of a lot of that. But I sat there for 2 years before these guys gave me any money to start trading with. And I've traded there for 17 years. I then left there and I went to run global head of foreign exchange for an online broker. So I've seen both the institutional side and the retail side of foreign exchange. And we decided last year that one of the reasons why retail traders seem to struggle in the world of foreign exchange is the fact that they keep reading books and they think that you can learn how to trade FX in a very short period of time. Unfortunately, if that was the case, everybody would be millionaires. So we created Global Forex Pros to talk you through 4 times a day in live trading rooms exactly what we see in the market. And I'm going to show you now exactly how we do that. So let's go on and have a look at, I want to talk about a few currencies today. Please remember, type anything you want in the chat, any questions you may have. I'm just going to talk you through exactly what we do to the clients that listen to us throughout the day. And I'm going to start with dollar yen. Why am I going to start with dollar yen? I think there's some interesting price action going on there. Obviously, please ask any questions in real time. Okay, so what we do have on our system is a system called Macalgo, which is available on our website. And that shows us, it's created from a mixture of technical analysis, algorithms, Elliott wave, candlestick formations, and gives us support and resistance levels. We have both long-term on a daily basis and intraday, which we update 3 times a day. So from this is our pivot level. We would look for a 30-minute close below this level to turn our dollar yen view to bearish. On a short-term basis, we've also got these resistance levels, 3 resistance levels and 2 support levels. So once we close below this level, we would be looking for that to be a target. So as we can see at the moment, we are turning away from this resistance level. I prefer to call them supply zones. I know a couple of the other guys on this FX Street, also ex-traders, understand exactly where I'm coming from. And we can see this sharp sell-off that we had yesterday. Obviously, that was on the back of the FOMC minutes. That there is some unfulfilled orders. The market was obviously ranging between here with a battle going on between buyers and sellers, and eventually the market broke down. So there's obviously some unfulfilled sell orders up here, and we would start to look to short up around one of these supply zones. How do we do that? Right, this is what we do. This is what we go through every day. We go and basically I use some very simple tools. I see so many things on the internet these days of different products, EAs, etc., that it's very confusing. I think it confuses retail traders. I don't mean that in any bad way at all. But as a market maker, obviously you're constantly quoting prices to other banks. You are basically your broker that you see, you know, quoting the price 31.32, 31.32, and when a bank or a client would pay you or give you, you would have to deal with that risk in real time instantly. So we'd have a longer term view, a shorter term view, and a very short term view. You know, we would look to necessarily cover that with a 1 or 2 pip loss if we believe that the overall direction was against the way that the client had given or taken the currency from us. So what we always do here at GFP, we start off, we look at the Macalgo to get us our underlying views on our supply and demand zones. And then we break it down into a 4, 2, 1, and 30-minute chart, as you can see here, which has got quite simply your standard moving MACD, which is with the standard settings of 12, 24, and 9. And then an RSI on a 9. I know most people use 12 or 14. I like to use a 9 for a little bit of a faster reaction. Boyke is asking me, where do we get those charts from? Those charts are calculated by our in-house system. The charts that you're looking at the moment is a Bloomberg screen. The reason we use the Bloomberg is because we're an independent consultancy service or education and analysis service for brokers. So it's not fair for us to use one particular broker's platform. So therefore, at great expense to us, we use the Bloomberg platform so that we are free and independent from any broker. Right, so we can see here straight away that I've drawn this channel in earlier today when we were discussing exactly where we stand in the market. And I'm a big believer in Elliott Wave, although I don't look at the exact levels. I don't believe we're going to stop exactly at any level, to be perfectly honest, whether it's a breakout of a range or a supply and demand line. That's why we call them zones. So this is the dollar yen we're looking at. And if we go back onto this chart, we can see that on a wave count basis, that we're calling this an A, B, and we're expecting a C to sell lower down, to start to come off, shall I say. If I pull it back a little bit longer, it's a bit more complicated. We've got this longer uptrend that we've drawn in from the past, obviously you didn't see. And we're thinking that we're going to have an A, B, C, back down to around at least the 118 level. That's our longer or medium term view, shall I say. Let me zoom back into that. We can also, actually, before I do that, we can see that this blue line works quite good. Obviously, this is a 200 moving average. This is a 50 moving average. This is a 21, and this is a 10. Why do I use those ones? Well, the market does look at those a lot. But also, if you think about it, a 21-day is basically 1 month, 10 days, 2 weeks. 50 days is basically a quarter or just under a quarter of the month of the year. And this is a 200. So we can see that we are in this trend, or in this channel, should I say, and that this MACD on a 4-hour basis is obviously still slightly bullish on the signal line, big above the zero. Looks like it's going to turn. MACD is, it's probably zero at this moment in time. So this is a very good point to be able to come and talk to you guys about where we're going to be. So I like to get the underlying view of where we stand in the price action and then break it down into the shorter time frames to see where we can get our entry point. So we are looking for the market to turn down. I don't pick an exact level and enter the price. Why don't I do that? Let's, for example, say we believe that the blue line, which had worked quite well here as a moving support, should we say? I hope you can see that. If we said, we think it's going to bounce off this level again and put a buy order in here, what has it done? It crashes straight through. So what we like to do here at GFP, and what I've done for the last 20 odd years, is I like to get a little bit of confirmation from the shorter term charts. There is a saying in the foreign exchange market that you can never pick tops and bottoms, and if you do, you're just lucky. And by that, by waiting for the confirmation in the shorter term time frames, yes, we give back a few pips, usually about 20 pips, but it enables us to get into the trend or into the trade with a high degree of probability, looking at the lowest risk, highest reward trade scenarios. We were expecting this sell-off simply because of this divergence here. We do look at divergence a lot. We can see that we were oversold here, so we were expecting this sell-off that occurred yesterday. If we go into the hour, we can see also here the 2 hours trying to turn, hasn't done so yet. And if I call up the signal line, I think we'll find that it has, or at this moment in time, the signal line is actually bearish at this moment in time. So we should be looking for this to trade lower. If I call up the hourly, We can see now, again, there's the channel in place. The moving averages aren't really showing us anything. They're two converged together. But the signal line now on an hourly basis is definitely short. MACD was bullish. Now it's starting to turn on the hourly basis with the histogram starting to come off a touch. Obviously, it can then re-go back up, but that doesn't agree with our view. And obviously, you'll see in a second why and where we would place our stops and our entry levels. I'll take that down to the 30 just to confirm my views and just to see where those moving averages are, looking for a break back down. Again, we can see the divergence here on a 30-minute basis, hence why we were looking for a top in place. Everybody gets what divergence is. Obviously, we make a high or an equal high, but the momentum, as we can see, has run out. It's not as high, which means that the buyers are not as powerful. The sellers are coming in. There's good supply up around this 119.40 level. So we can see that the market started to turn up. This was our wave B that we're looking for, that we had, and now we're looking for a wave C. Where do we get the channel then? Therefore, if we've got this as an A, oh, I need to zoom back out again. Obviously, those of you who know about Elliott Wave or have at least studied it, it is subjective, I don't deny that. But if this is the start of A and this is the top of B, then we should have some target back down here for the wave C, as in A, B, C. So we believe that it's going to turn down. We'll zoom back in. We can see the 30 minutes is starting to turn. We're out of the overbought. We've been testing this moving average. We'd like to see a 30-minute close below the moving averages to confirm that this sell-off is starting to take place. What do we do? How do we decide once we reach one of these levels? One, like we saw here, this was a level from the Macalgo, the supply zone levels that I showed you initially. What we then do is once the price starts to approach one of these levels, or as you can in this case, the top of this trend, we would cut it down then into the next time period. And in the next time period, we look again at the hour, 15, and really, if we are intraday trading it, we can break it down into the 5s to try and pop into an early level. But I suggest using just the 15. As I say, in general, you give away around 20 pips if we're wrong. So I start again on the 60 minutes. I'm sorry that obviously when I use Bloomberg, it always takes me back into the last time zone. Right, now, let me zoom in on this crossover. This is what I call a crossover basis. So this gives me the indication of a turn of the trend. Here I use two moving averages, the 4 and the 6 exponential moving average. I don't do anything else with them. I don't shift them. I do that on another chart in a minute. But again, just simple moving averages to show us the momentum and to show us what the market is starting to do. We can see here we almost had a bearish engulfing pattern. I have not really prepared this. I'm just talking to you through these markets in real time. So please remember to ask me any questions. The red and this red and this green line is something called a trender, which is available, I believe, only on Bloomberg. Okay, Linda, I'll ask you a question in a minute about the Euro-Swiss margins. It's due to the volatility that's just taken place in the market. But obviously, with that floor or supposed floor at 120 in the Euro-Swiss, when it broke, people were using that to do a carry trade. They were using 1, 2, 500 times leverage, even though the interest rate differential was very small. When you're leveraging up off the back of your broker's liquidity and prime brokerage account, because obviously their banks are giving them leverage on the amount of balance that they have sitting with them, it did start to add up. I believe the numbers, I think I calculated it, that on a 1,000 account, you were earning around $7 a day if you had 100 or 200 to 1 times leverage on Euro Swiss. So that obviously starts to add up. And people played that for around 2-3 years. And obviously when the Euro Swiss jumped, they sold out again. When it came back down, they did the carry trade again. So that's why brokers' margins on Euro Swiss, I wouldn't be surprised if you've seen them change to on the same on Euro Danish, which is obviously the next carry trade, is one of the reasons why people are looking to increase those margins obviously the more liquid trades such as euro, dollar, sterling, etc. I do think that we might see these margins reduced across the board for some of them. 500 to 1 leverage is really only in the broker's favour rather than the client's favour. And obviously with the new STP model, which also caused a bit of the problem, I have to admit, I think that an agency model with a bit of a B-book is probably going to be the new norm, shall we say, going forward, and that regulators thought they were doing good to the retail trader, but at the end of the day, didn't do, their heart was in the right place, let's say, but they're not experts in foreign exchange. They should have asked me. When I was at ACM, we had a Euro-Danish carry trade, which we suddenly saw a lot of clients start sticking all their money into Euro-Danish. We couldn't work out why, what was going on. And then literally within a couple of weeks, we had some huge Euro-Danish positions. We then suddenly realised it was a carry trade, and the broker stops paying us any interest on the carry trade. So if you're seeing that you're not getting any forward rates or swap rates from your broker on any of your positions that you think you should be getting it due to interest rate differentials, that is the reason why that is. Right, let's go back to what time do I trade on Boyka? I take different time frames, to be perfectly honest, but I usually try to enter off a 15-minute chart on my views on the intradays, and in the longer term, I will usually take it off of an hourly. Obviously, I have to adjust. My stop losses are going to be more expensive, so excuse me. So my leverage is adjusted accordingly. I don't like to risk any more than 1 to 2% maximum on any intraday trade, and I usually only use 1% on the intraday trade, because if my view, as I say, like I've just shown you on the longer term, dollar yen is going to short. Let me show you as an example now. Then I will take that off the short time, and then when the longer time frame confirms it, I will add again to take me up to 2% on that trade. Right, so as I was saying, I look for the moving average crossover, 60 minutes. We can see there it's trending high, it hasn't crossed. So therefore, I won't be taking a trade on that 60 minutes. I will take my trade off the 15 minutes. We believe we've seen the top of that channel. Again, just simple crossover. I've drawn on here earlier. I did have a show on the GFP site at 1:30, hence why you can see that up there. And we can see we stopped just after the show, look, 2:45. That was exactly at the 76.4 retracement level. Okay, so let me zoom in so we can see that better. I'll zoom in again. You probably can't see that well enough. Right. So we were looking for a retracement up. We expected it to trade higher. We were looking for it to turn somewhere around the top. We didn't know whether it would stop exactly at that trend line. I wouldn't have bought it on a break of a trend line. As I say, you know, you often you get a spike up. I'm sure you guys have all seen it where it spikes up and comes straight back through. If I did want to trade it off a break of a trend line, which I often do, you know, then I wait for that period to close, and then I would use the low of that bar or candle or whatever it is you look at, that closed above that trend line as a stop. But our longer term view is that dollar yen, or medium term view, is that dollar yen is doing an ABC formation. So therefore, as I've seen the B, and now I'm looking at this going up as part of the longer term of the C wave, shall we say. We can also see we've got 5 waves up, 1, 2, 3. We could have stopped here just as an ABC. This is what we discussed earlier. For 5. So now we're definitely looking for a top in place. So we can see here, for example, we haven't crossed on the moving average. Let me just get rid of that for you so you can see it clearer. Right, that's much better, isn't it? We can see here that we hadn't crossed on the moving average. We hadn't even crossed here, even though it looked, forget the trend line, like it was going to cross. It hadn't crossed on the moving average, so we hadn't taken that short. And we would wait until the moving average is crossed, and we've crossed just here now. So you could either sell it here now, I would say, with a stop back above this high. I will always stick 5 or so pips above any previous high as an ex-trader, or as a current trader, but as an ex-bank trader, we often, well, I'm sure you've heard the term stop busting. And obviously 119.20 is too round a number. I never like to leave a stop on a round number, whether that's superstition. Well, the superstition side of that is I always like to leave it at an odd number. Don't ask me why. I'm sure one of you can probably tell me if that's feng shui or something like that. But anyway, back to this. We've got 5 waves up in the short term. 1, 2, 3, 4, 5. Moving averages have crossed. There's another thing I like to use. I either trade simply on the crossover, but I use another indicator as well to give me some more confidence. Yet again, simply just a moving average, which is a 5 exponential moving average shifted 5. This is often very good as to follow up a trend. And the way we use this, I will zoom it in now to show you, is let's go right onto where we are now. So we saw the moving averages cross. We've closed below this 5 exponential moving average, shifted 5. I obviously always use exponentials. That does just give more weighting, as you guys know already, to the previous price action. And then I would wait for it to trade a couple of pips below the low of the bar where it crossed, or the candle that it crossed. So we crossed there at 1545 bar, the lower to 1894. I'd sell at 1892. My stop will now be, as I say, 5 pips above here. Let's say 119.23. I am actually sitting short on the short-term chart, looking for this ABC correction to the downside. No, Boyke, I'm not a scalper. By scalper, are you talking about... Hi, Jen. Welcome back. Glad to speak to you. Glad you're back in the room. No, I'm not a scalper. I'm not... by scalping, I think you're talking about like 5 or 10 pips, aren't you? No, not at all. Far, far from it. What I like to do is I like to take a trade off of here, for example, as I'm explaining to you. And I've got a view that if we go back to that 60 minutes on the momentum, that channel, what am I doing? I'm selling it now. I'm risking 20 pips. If I'm wrong, I'll wait for the next turn. Where are we? Right, let's go back to this. Is the one I wanted the hourly on that, didn't I? Right, so yeah, I'm looking to sell it now, aren't I? My stop loss is here. Where's my take profit? Well, I might well reduce my order after. I'm certainly not going to leave my stop there as the market comes down. I will use a trading stop behind one of those moving averages that you've just seen. I'm looking for it to trade where? Back down 117, 117.50. Oh, wrong way. Somewhere. Sorry about that. I've done it completely. So I'm looking for it to trade back down here somewhere. I will also go on to my, which is obviously adjusted throughout the day. I will also use the Macalgo that we have in place, as I say, which has already got some of these levels off. Simple. You can simply find supply and demand zones from a long time ago. But if you bear in mind that once we close below the pivot at 1850 on a 30-minute basis, our next target is 1817, and I'm selling it here. I'm risking 20 pips to make a minimum of 80 pips. So no, I wouldn't call that scalping. I don't know if you guys call that scalping. And as I say, personally, I will also use that to add then the longer term charts, the 60 and 30 minutes are starting to go in my direction. I've got Linda. What do you mean BGN? I'm sorry, I've not heard that term. If you have you seen BGN? I don't know what that means. Bloomberg, something or other, I'd imagine. It's the spread up here. It's just the pricing. I don't actually trade on the Bloomberg system itself. Right. How about news? Will not price turn when news comes out? News is very important, and it does affect. It does affect the markets without a doubt. We saw yesterday, for example, FOMC minutes came out, but the news, I don't enter on news. I will always have same as, okay, Boyke, same thing. How do I handle these? I have my stop losses in place. I'm not going to trade the news. I don't trade the news. I will see a turn in one of those moving averages. If it's a strong enough turn, for example, it will give me a signal. Let's go. Let's just check out the, while we're talking now and you're asking me these questions, let's see how it works. I wait for the moving averages to turn and to close. I'm not a news trader. However, I have my stop losses in place because obviously non-farm payrolls, sterling GDP numbers yesterday, anything can happen over the news. So I always, as any professional trader does, you always have a stop loss. You know where you're going to be wrong before you even enter a trade. I mean, I cannot bang on about that enough. Good trading it's very boring to say, it's all about risk management. Okay, this is what is drummed into you. As a professional bank trader, we are taught again and again and again, where's your stop, where's your stop? Are you moving your stop? You never move your stop away from your entry level, only closer, as in a trading stop. And therefore, if I know there's major news coming out, then obviously I have a stop loss in place. You know, I've sat there, I've traded through 9/11, I've traded through 7/7. If you had no stop in place, obviously it didn't really help much. To how much do we pay? It didn't very help much last time, obviously, with the Euro Swiss for you retail guys out there, with complete breakdown in liquidity. But in general, you know, normal market conditions, you should be done. How much do I pay to use this chart, Linda? Well, you'll have to phone Bloomberg to ask that. But I mean, Bloomberg is really, it's a great charting system. Don't get me wrong, it's superb news. It's expensive. It's expensive. And you know, it doesn't show too much different to what you guys are seeing in real time on whatever platforms you are using. You know, pretty much it doesn't matter whether you're looking at euro dollar or a 1 pip spread or a 3 pip spread. For me, as a professional trader, I don't really care about the spread. All I care about is getting executed when I want to. One of the most annoying and frustrating things is entering a trade or wanting to enter in a trade and getting rejected, entering, you know, chasing the market down. So for me, execution is far more important than pricing. No, Boyke, these prices are live. I should hope they are at this cost. Right, let's just go back then quickly to that 15 crossover to show you, as I said, on the FOMC news yesterday. Let's see what we had in. We would have had, if we were, I would have sold it down here. Okay, we've got the crossover. If I was looking to sell it on a dollar-yen base, on a short-term basis, we were looking for a retracement. If I wasn't already short, I don't think I was actually, looking back to yesterday. I don't really also like to trade the news. I like to keep it, I like to keep out of these things and just let the dust settle. We've got enough trading opportunities in enough different currency pairs in enough different time frames that why sit there and trade the news? If the news, all it does is turn the overall trend, then you've got a lot more upside or upside potential on your profits to make than trying to risk on the flip of a coin. My motto when I was a market maker for 17 years at a leading world investment bank, as I say, was non-farm payrolls day. I'd be happy if I came out with the amount of money I started with, a big fat zero on the pad. So now that I'm not forced to trade these numbers, I can now take and gather that information from the price action and use that price action to adjust and take my views for the coming period, hours, weeks, months, depending on how important the piece of news was. Z is asking, for the previous example, when you aim for about 80 pips profit target, then if there is news announcement, say 30 minutes later, then how do you manage it? Will the 80 pip target stay? Very good question. I have a profit target. I'm obviously watching the markets. If I'm not watching the markets, then I will have a profit level in for around half of my position. I will remain, the stop loss will always stay there. But let's just say, for example, as you say, like, so here I had a profit target. What was the high here? Let's say we were long. Let's say we were short and it broke down, 1930. And we dropped what? So we dropped 70 pips. Let's say my profit target is 80 pips. I'll have half the take profit here. Obviously, the stop loss will be there. I will be watching major news announcements. So in general, we are monitoring it. But overnight, then I will leave half of my underlying position at my profit target or around that level. I'm more than happy. And then obviously we can move the stop loss down to have free trade and pull the stop loss closer to have a, you know, if we are risking 20 pips, as I say, and it drops 80 pips, we've closed half the position. We can move the stop loss down to our entry level or lower, and we've at least guaranteed to make 40 pips. So what time frame do bank traders trade on? Bank traders don't really, as a market maker, you're not sitting there. You don't have the time to sit there and look on the long term. You've got your long-term view, you've got your levels, you've got your ideas. You're looking at that. You know what's going on. you see the price action in live at real time. Don't forget, you are quoting the prices. So at this moment, as a bank trade, you're going, I am 99.01. You know, your customer dealer is pricing $20 million yen, Matt. I think the client's a seller. I'm 97.99. Yours at 98, 97. So I can then go in the market at 98 because I think it's going down. If he paid me at 99, I might well leave that trade open, hoping that on the short-term basis that I'm looking at, the market's going to continue lower. As a retail trader, I don't suggest you look at 1 minute charts. Do I hold trades overnight and weekends? Yes, I do hold trades overnight and weekends because I have long-term trades and I have intraday trades. But I always have stops in place. So obviously we don't gap as much these days as we used to. And I like to reduce the size of my trades going into a weekend. I can then reopen them again on the Monday morning. I don't mind giving that time frame up. So going back to what Boyke was asking a second ago about interbank market making trading, we really are looking at the price action on a 1 minute basis. We're not looking so much for head and shoulders and tops and terms. It's something you just pick up and you just get to feel as the price market turns. Right, guys. Well, as we're running out of time, let's do you want to look at another currency pair? Because I was going to look at dollar CAD because dollar CAD's been a bit active lately. We can see that down here. Obviously, dollar CAD is influenced by the oil. Long term, I am big bear on dollar CAD, which is a bit contradictory to my view in oil, which I actually think is going to trade back down to somewhere in the 20s. But we can see the oil today here is off $4. This would explain the sell-off in the dollar CAD, or the CAD against the dollar, as we say. So let me go into these charts and quickly explain to you where I'm coming from on that. I've called up the Macalgo, as we always do. And we were above the pivot, if you like. So we would be looking on a Macalgo basis to buy it on dips. On a longer term basis, I've got my wave count of 1, 2, 3, 4, 5. This is finishing a wave 1. I can break it down a bit more if we had a little bit more time. So I have no problem doing that next time, maybe. In fact, let us know next time what you guys want me to talk about, and I'm quite happy to do that. And then we've got an A. This is a complicated B, C higher. We've also got this push up here. 1, 2, 3, 4, 5. You could possibly count in if you really want to break it down in the very short term. But you can see here, there's definitely some old selling orders from where we pushed back down again on the 12th of Feb. I mean, if we've seen it, we rejected it here. It's a zone. It's not a level, remember, I like to say. And we spiked up earlier and we've come back down again. I am looking now, as I say, for the market to turn. Do I think we should wait to see what happens when Greece has a meet on the February 20th of the euro? That's a very interesting question. I am actually small euro long. I've got a stop at 12.40. The reason I am that is I am long, I believe, and obviously we could make a spike down lower depending on the Greece news. We really are flipping a coin on that. On a longer term Elliott wave basis, I believe this dollar index is massively overdone, and I'm looking for a multi-week, multi-month rally, to be honest, or sell-off in the dollar index, rally in the euro dollar and the sterling. Obviously, just a matter of time when I get in. Boyke, I do have a dollar ZAR chart. I haven't looked at it, to be perfectly honest, lately. I can have a look at that for next week's session if you would like. I'm more than happy to do that. In fact, let's have a look at dollar ZAR. I know I'm not a great emerging market trader, but let's quickly go with this CAD before FX Street cut me off. So I just want to show you how a simple use of moving averages and MACD, I believe, and I've worked and traded on this for years and years, works as over time as a long-term profitable system. Right, so we've got this resistance level. We've probably also got it up near 61.8% retracement, I would imagine, just looking at off my eye. I'll pull that up off a momentum trade to have a look. Okay, so obviously we like to go 4 hourly. Right, we've got a downtrend line on a 4 hour. I forget half the time what I'm looking at or what I've drawn. We got triple diverge. We had divergence here, sorry. So that's why we were looking on a long-term basis for it to trade lower. I'm not going to go into the really long-term count, as I say, but with this we're calling one. Well, this is actually, no, this is what we're calling one. This was 1, 2, 1, 2, 3, and we're going to sell off quite sharply in a 3 of 3. This is what our wave count. We are overbought on a 4-hour basis. The signal line is below. We should be looking to sell it on rallies. Let's go into the 2-hourlies. See what we see there. We can see that was because yesterday I was doing the dollar CAD on our longer term analysis. There's my wave count. So let's just zoom into there. We were hoping that, we were waiting yesterday for the possible push higher again. We've seen that. We didn't know exactly where it was going to end. MACD was bullish. We've seen that. RSI wasn't overbought. We are now. So we also had that downtrend line coming in, remember. So we were looking for a decent turning point. We are above. We've stayed above these moving averages. So we were expecting, never closed decently below them. We were expecting it to trade higher still. We were right. Going into the hourly. Right, I'll put that retracement on there now for you. I hope you'll be able to see it okay. And right, we're just shy of the 61.8% retracement. Obviously, that's just there. Obviously, it's a little messy. This is why I have different charts with different moving averages. Boise, no, I'm a far more technical. Definitely a technical trader. I have to pay account of fundamentals, but yeah, one of the things that I do believe is when the whole world is talking the same way, you know, beginning of the year, everybody's talking dollar, dollar, dollar. The fundamentals often catch up after it. As far as news, obviously, once a major fundamental sign comes out, but people read fundamentals in a different way, don't they? I mean, look at non-farm payrolls. 1 minute we're looking at that side of non-farm payrolls, unemployment, and then the next week we sell off again on the dollar because your average earnings are lower. So I'm definitely a technical trader. We cannot ignore fundamentals without a doubt, but no, I'm definitely a technical trader. I think we can gather that from what I'm showing today. What do we also see here then quickly? We can also see 1, 2, 3 lows or 3 slightly higher lows on the MACD, yet 3 lower lows on the pricing. So we were definitely looking for a bottom. If I see triple divergence, I always go with it. Always like to go with it. When will I go with that? I will then break it down into the shorter time frames again. Obviously, on the hourly, we're overbought. We're looking for that retracement up at that 61.8 or close to that 61.8. That's why I say you never wait for an exact level. Foreign exchange isn't like that. Anybody who tells you it is has never been a trader or a proper market trader, should I say. Right, let's zoom in. Let's quickly move in. I think I've only got a couple of minutes left. Right, so we can see we still are above on the moving averages. We're getting out of the overbought zone on that RSI. So I will have to quickly, because I've only got a couple of minutes left, show you the crossover. And then I'd just like to show you what we offer to GFP that you can get your brokers to subscribe you to. 4 times a day, you can have the pleasure of listening to me through the GFP website, which your broker can subscribe to and give you free of charge once the broker signs in. So there we go. This was obviously a channel we would have been looking at. We've taken it out. We've popped above. That's not a worry for us. We are looking, in this case, for a 15 crossover. And on the dollar CAD, we are going to cross very soon, in fact. We need to keep an eye on that. We can see it's closing here. The MACD is turning. It really does look like, even if you want to say on a longer term, we're getting the opportunity to get in at an early stage. So what we could do is we would sell it up here if and when it turns. Stop loss, as I say, again, a few pips above there. And going back to am I short or long-term trader? Boyke, then that would be my short-term trade. Once the market starts to pull back down again, we take out that low of wave B. Then I know for a fact that my view was correct, that we have completed the correction of wave 1. So this was wave 2. Now, once we take out the lower wave B, I can then add it on a longer term chart, be that or the hourly cross or the 2 or whatever. I've obviously then got a nicer average. My stop loss isn't going to cost me as much, and I can start to run this down for a longer period of time. I do sometimes, I won't deny this, well, I do all the time, to be honest, look in the 5s, 5 minute again, just for that crossover, just to see whether there's divergences. You can't really trade off a divergence on this, but you get a clearer image, I guess that may be because of my market making days, of the closer price action. From that, obviously we had this spike up, which made this high here. We continue to grind out. It does feel to me like it's getting heavy, and at least the MACD has turned bearish, and we will wait for those moving averages again, though, even though it's spiked. Look, we only crossed just here, small cross back up again, but don't forget our underlying view was looking to sell rallies with a stop in place. Right, so before FX Street kicked me off, I'd like to thank them for letting me have this moment to talk to you guys. I'd also like to thank you all for listening to me. If you'd like to find out more about Global Forex Pros, then obviously you can look at the website, but we are actually only available through your broker. 4 times a day, we do 3 times a day the intraday, where we break down 7 currency pairs in gold. And we also look once a day on the longer term charts. And we look at the longer term charts. And we also have a live SOS chat room where you can speak to our traders directly here. We have the real-time trading news, which is quite good. We look at the various different rumors, option expiries, etc., that are taking place in the market that I hear from some of my contacts. As you can see here, we had option expiry at 119, I believe, in dollar yen at 4 o'clock, and I'm pretty sure we were 119 when I started this webinar. We have FX education. There's 30 odd hours of videos there for you guys to get some basics. But as I say, the most important part, as far as I'm concerned, is this live trading room. As I say, 2 years I spent learning to be a trader, sitting next to a professional trader. And this is the closest you guys, I believe, can get at home, is to sit next to me as I talk through the markets. And then obviously you can ask us in real time in the SOS chat room. So rather than having to sit next to me, you get the chance to ask questions, interact 4 times a day in a webinar, and ask us questions. And obviously, if you're working or you don't get the chance, as I say, we have these levels that you guys asked me about earlier, which are updated 4 times a day, once with the medium-term outlook, and then our intraday levels. We also have the calculators that everybody has. But if you're working or you miss it, then you get the chance to update yourself with the last 2 weeks of webinars. And these are always worth going back, checking on, especially the medium-term one where we look at it. Right, guys, I'd like to say thank you very much. And I hope to see you again next week. Thank you very much for your time, guys. Bye-bye.